Good morning and welcome to the Killik and Co market update. We've had quite a few bits of UK-focused economic data out this week, so let's have a look at some of those. First of all, we had the latest inflation reading for the UK, which came in at 9.1%. Now, this is a relatively high number, but there are some indicators that we are starting to get close to peak inflation. As well as looking at the headline rate of inflation, we also look at what's called the core inflation rate. And this is simply the headline inflation rate, but with energy and food prices stripped out, because these tend to be relatively volatile. So here on this chart, we've got the 5-year UK core inflation rate. And yes, it has come up a lot over the past year, but you can see it dropped over the course of the last month, and that did come as a surprise to some economists. We've also seen quite a fall in longer-term inflation expectations for the UK, and we can measure these by comparing the prices of regular government bonds with inflation-linked government bonds. If inflation-linked government bonds are trading at relatively high prices, then that implies that inflation expectations are also high. So we've done this calculation for both 5 and 10-year government bonds, as shown by the pink and the green lines, but as you can see, the overall pattern is very much the same for both. It's also worth noting that government bonds use the RPI inflation rate rather than the CPI inflation rate, but what we're really looking at here is the overall trend, and you can see there has been a sharp move downwards in this trend over the last month, and that implies that longer-term inflation expectations for the UK have fallen. This week we had the 6-year anniversary of the Brexit referendum, and it's quite amazing how quickly that time has gone. And there have been some positives and some negatives. On the plus side, the UK was able to approve its COVID vaccination programme much more quickly because it didn't have to coordinate with the EU. But on the negative side, there certainly has been a reduction in trade because of the red tape at borders, and the Irish border issue still remains unresolved. And the pound is still much weaker than it was before the referendum. On the subject of the UK's public finances, this week we had the latest UK government borrowing figures, which came in ahead of expectations. Here on this chart, we've got the UK's monthly net borrowing figures going all the way back to 1997. Below the pink line is when the government's tax receipts exceeded its outgoings and no borrowing was needed, but above the pink line is where the government had to borrow. And you can see there was quite a big increase in government borrowing due to COVID. The figure for the last month was above expectations, and that's largely because the government has a lot of inflation-linked debt. 25% of outstanding UK government bonds are inflation-linked, so when inflation rises, the government has to pay more interest on these, and this can lead to higher levels of government borrowing. And finally, some positive news to finish on. Accenture published its results this week, and it has raised its guidance for the full year. Accenture is a technology consultancy that helps other businesses with their digital transformation. Although Accenture did suffer a bit due to the stronger dollar, it still managed to achieve revenue growth of 22%, its new bookings were up by 10%, and its earnings were up by 16%. So it's encouraging to see that other businesses are continuing to invest in digital transformation despite the headwinds that the global economy is facing at the moment. Moving on to have a look at next week, we're expecting results out from Nike. That's it from us. Enjoy the weekend, and we'll see you next Friday.